Hey traders, Raghee here, and in this free recap video, we're going to talk about the importance of psychological levels. Now, I believe they're important for any type of trader, short-term, long-term, 1-minute chart, weekly chart. I mean, 00 levels are always going to be important, and really the reason for that is they represent the stealthy support and resistance levels that exist on every chart. And I'm going to show an example just from today, and this is a trade that we put on this morning. And we had interest in getting long on the pullback, the Dow, the S&P, and the NASDAQ. And what I'm focusing here is my favorite and really my most conservative morning setup, which is what's known as the hourly price movement range low. So what we call the HPMR low. And the reason we call it that is we're calculating what a projected low would be based upon the hourly price movement range. And that put us in a very specific range today. In fact, it started about 755, 745, so 26,000. Then it got down to about 20, and then the lowest low was about the 05, so 705, 26,705. And the 05 would be is kind of an ideal level to look at because it's right there up against a 00, where if you've spent any length of time and depth of market expanded or level 2 in stocks, you'll notice the size, the actual trading volume that congregates at levels like the 00 and even the 50, the half mark. These are major psychological levels. And so if I can take advantage of major psychological levels like that, the closer you get to them, the more likely there is a chance that the market's going to hit support. And the opposite way, let's talk about, we got long, by the way. We hit not just the 45, 55 alert, we also got down to the 25 area and got long. And then take a look up here. That's 26,795. So just like I would be willing to buy a test of, say, the 700 level, as we approach the 800 level, I know what's going to happen. Well, if this was support, isn't this then very likely to be resistance? And as we get closer and closer to this level, I'm going to expect the selling pressure to start to build. That means I want to get out while I can, not when I have to, and then I want to ultimately pay myself. So this is something where if you're looking for pretty simple targets, intraday or end of day, I'm just showing a intraday because you can see it all on one screen happening really quickly. But if you're looking for opportunities and you're looking for where that opportunity could stall, either for an entry or for an exit, look for those 00s. They're in play all the time. Your 700 would be down in this area. They're in play all the time. And then if you can get support, resistance, Fibonacci levels, and hourly price movement range to line up with it, all the better. So this is a pretty easy example of about a 40 to 50 point profit target conservatively to, if you were down at the 25 level, which was a second level to buy at, this is a pretty nice 70 point win on a pretty tricky day with options expiration. I got to remember that I'm trading really stocks all bundled into a futures contract, but that is a very nice trade from either one of those levels. And the reason we know this target is hanging out there, thank you very much, major psychological levels. Look for those 00s and 000s on your charts. Remember, heading up towards them is resistance, heading down towards them is support. Keep them in mind, and I'll see you in the next update.